Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letter CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Good morning, good afternoon, or good evening, depending upon when you're listening to this podcast. But no matter when you're listening, it's always a good time to learn about reverse mortgages, right? Isn't that great? Today, we're going to try to answer the question, and I hate that word try, I'm sorry. We are going to answer the question, is a reverse mortgage really worth it? We're going to look at pros and cons of reverse mortgages, and we're going to dig a little deeper into a couple of the pros and a couple of the cons and finish off with a couple of examples that you could use for hopefully your situation. And if these examples aren't your specific situation, give me a call and I can run numbers for your specific situation so we can get you the information that you need to make an informed decision as to whether or not a reverse mortgage makes sense for you. My name is Bruce Simmons. I'm the reverse mortgage manager for American Liberty Mortgage right here in Denver. You can reach me directly on the phone at 303-467-7821. 303-467-7821, or you can visit me online as well at reversemortgageradio.net. Reversemortgageradio.net is the website. You can download the podcast on my site, but I also think we're on a few other platforms now. I believe we're on Google, iHeart. I don't think we're on iTunes or whatever it's called. I don't even know what it's called. That's not my area of expertise. Reverse mortgages are my area of expertise. I just get the podcast to my web guy and he takes care of it. So if you search around, I think we're on YouTube. That's right, we are. So just Google Bruce Simmons Reverse Mortgage Colorado and you'll find me, or Reverse Mortgage Radio. You'll find me. But anyways, today, like I said, we're going to be talking about whether or not it's worth it for you. But before we can get there, before I can get into the pros and cons, you need to understand a little bit about what a reverse mortgage is and how it works so you understand the pros and cons. It doesn't do me any good to say, hey, this is a non-recourse loan. And you say, what the heck is that? Well, is that a positive or a negative? So let's talk about what a reverse mortgage is. Most of the time, not 100% of the time, but 95% of the time, a reverse mortgage is an FHA-insured loan. FHA stands for Federal Housing Administration. What that means is that this loan is insured by the federal government. It's not a loan from the government. No, not that at all. Scratch that from your mind. A lot of people think the government's loaning them money. That's not the case. They just insure the loan. So they make sure that that money that's available to you in the reverse mortgage is going to stay available to you throughout the life of the loan. They also guarantee that should you ever end up owing more on the loan than the house is actually worth, that you're not going to pass a debt beyond the value of the home to your heirs or your estate, or you personally. So we're going to talk about that too in the pros and cons. But basically, it's an FHA-insured loan that's specifically designed for people that are 62 and over. It allows you to convert a portion of the value of your home into money that you can use to spend the way you see fit after we pay off any existing loans on the home. Any loan that's on the home currently has to be paid off in order for you to do the reverse mortgage. The reverse mortgage has to be the only loan against the property. If you've got a home and you owe $300,000 on it, and we can loan you $300,000, then all that money is going to go to pay off the existing mortgage on your home, and you're going to save the principal and interest portion of that payment, because with reverse mortgages, no payment is required. It's a payment optional program. You can make payments. Most people don't, but you could if you wanted to. However, remember this because it's very important. You still must pay for your own property taxes, your own homeowner's insurance. You must maintain the home, live there as your primary residence, and keep your name on title. As long as you do those 5 things, no payment is required on this loan. And the lender can never, ever, ever kick you out of the home. The loan only comes due when the last homeowner permanently leaves the home, or the younger homeowner turns 150 years old. So who knows? That's maybe coming down the pike. I hear, people do reach that 115, 120 range. They're getting close to it. So that's what causes the loan to come due, is when you leave the home permanently, or if you hit 150 years old, or if you don't pay your taxes, insurance, live there as your primary residence, maintain it, or keep your name on title. So you got to keep your name on title, because what happens sometimes is if you live in your home and everything's fine, you've got your reverse mortgage, but then you decide, you talk to an attorney, you say, hey, you know what, it's a good idea to put my home in a trust. And it may be a good idea. However, if you have a reverse mortgage, you can still do it, but you just have to get approval beforehand, because we have to make sure that that trust meets FHA guidelines. And when you transfer the home from your name into a trust, the name of the trust, if you're Tom Jones and you transfer it to Tom Jones Living Trust, well, you're taking it out of your name. It's no longer in your name. It's in the trust's name. And so that's a very important distinction that you have to understand. If you already have your home in a trust, it's most likely that we could do the loan for you in the name of the trust. And that I've done that numerous times. If you're talking to a reverse mortgage person and you tell them, I've got my home in a trust, and they say, oh, well, you need to take it out of the trust to do the reverse mortgage. That's not true. You don't have to do that. Call me. I know what I'm doing with it. Don't talk to these amateurs. Another aspect of the reverse mortgage is that it's got a lot of flexibility in that you can receive the money in different ways. And we're going to talk about that in the pros and cons section as well. Just one thing I do want to touch on real quick before we get into the more nitty-gritty of the loan is that no payment is required, like I said at the beginning of the show. However, you're still charged interest every month. And that interest gets added to the loan balance. So the loan balance gets larger and larger every month. I always tell everybody that looks into a reverse mortgage, every month you get a statement in the mail or you can check it online. But you're going to see that balance getting larger and larger and larger unless you're making payments, which a lot of people think defeats the purpose of a reverse mortgage because they don't want to make payments. But that interest you're charged every month gets added to the loan balance. So the balance gets larger and larger and larger. If looking at that loan balance every month causes you more stress than the benefit that you receive from the reverse mortgage, you should not do it. That's one of the key factors. The benefits have to outweigh the negatives. And one of the negatives, in some people's mind anyway, is that the loan balance grows over time. I'll tell you what, let's just jump into the pros and cons right now. The pros, number 1, no mortgage payment required. Like I mentioned before, though, you still must pay your property taxes and homeowner's insurance. You have to maintain the home, live there as your primary residence, all that stuff. So the taxes and insurance are still your responsibility, but there's no principal and interest payment. That's the whole benefit of the loan to start with. That's what most people love about the reverse mortgage. The other thing is, too, the money you receive from the reverse mortgage is tax-free. You're not charged taxes. You don't have to pay taxes on it. It's not income. You could be receiving money on a monthly basis from the reverse mortgage because that's one of the ways that you can receive the money. It's very flexible, but and it's not taxed as income. It's not taxed at all because it's considered loan proceeds. Okay. Number 3 on the pros, and I'm only going to touch on 5 pros and 5 cons. It's what's called non-recourse. Remember at the beginning I said that the loan, the FHA protects that if you ever end up owing more on the house than it's worth, you're not going to pass that debt beyond the value of the home to your estate. That's called non-recourse. So the house is the only way the lender can collect on the loan. Let's say, for example, and this requires a little more detail here. Every month you're charged that interest and your loan balance gets bigger and bigger and bigger. Theoretically, you could eventually end up owing more on the house than it's actually worth. We don't loan as much as we used to. Back in the early 2000s, late 90s and things, we were loaning a lot higher percentage of the value than we do now. In 2008, 9, and 10, there were a fair number of people that were upside down on the loan balance. The ones that continued to pay their taxes and insurance and live in the home, they eventually right-sized their house, and they ended up with a lot of equity in their home because the value kept going up faster than the loan balance. Interest rates were super low, and the property was appreciating very nicely in the 2013, 14, 15, 16 timeframe. And so, they ended up with a ton of equity in their home. But other people, let's say if you were to pass away in 2009, when property was at its bottom and you'd had the loan since 1995, so you'd racked up 16 years worth of interest on the loan balance, it was possible that you left a debt beyond the value of the home. However, your heirs were not responsible for that. What would happen is your heirs inherit the home. They would realize that you owe more on the house than it's worth. They could just sign the house over to the bank or the lender and walk away. The lender had no recourse against any other assets that you owned or your heirs or your estate. Or let's say you had to move to assisted living. You have to sell the house. Well, you realize more is owed on it than it's worth. You can't sell it. So you just sign it over to the lender and you walk away. You clean out everything. Everything inside is yours. So you take all that stuff and you either sell it or whatever, but you move on. The lender cannot come after you, your estate, or your heirs. That's non-recourse. Also, number 4, it's flexible disbursement. This is I alluded to this a little bit. It's a very flexible payment plan. You can receive the money a number of different ways. You could take it as a lump sum. Now, there's certain restrictions, but you could take a lump sum. You can also receive it as a line of credit, where that money is just sitting there. It's just sitting there waiting for you. And it is accessible anytime you want, but you're not being charged interest on that money while it's sitting there. It's just sitting there waiting for you. You can also receive it as a monthly stipend, a monthly payment. And I mentioned that before. Let's say you tell me you want $600 a month. We can deposit $600 every single month. And we could set that up in a couple of different ways. One, we could set it up guaranteed as long as you live in the home. Or 2, we set it up over a certain time period. I just closed a loan recently where the customer wanted to receive $550 a month for 15 years. At the end of the 15 years, she's going to reevaluate. Maybe she's not even living in the home anymore. She wants to sell. Maybe she needs to up it to $1,500 a month. Maybe she doesn't need it anymore, whatever the case may be. And the nice thing is you can change that at any point throughout the life of the loan. You do not have to wait till that term is up. Or you could do a combination. You need $10,000 now to take care of some home improvements or pay a bill. You also want to set up a $50,000 line of credit and put the rest into a monthly payment of, let's say it turns out to be $800 a month, however it works out. So it's incredibly flexible. Lastly, I want to mention real quick is that the line of credit that you have available to you, I mentioned it's just sitting there waiting for you. Well, actually, that's not true. It's not just sitting there. It's getting bigger and bigger and bigger, and it's going to grow big over time, right? Basically, the line of credit has a growth rate to it. What it does is it grows over time if you don't use it. And even if you do use it, let's say you take 10,000 out and you leave the rest of the money in there. If it's 90,000, that 90,000 grows still. Whatever's in there is going to grow. It gets larger based on the interest rate you're charged. The line of credit grows at 0.5% greater than the interest rate you're charged on the loan balance. If you have a $30,000 loan balance, so you've taken $30,000 in equity out, but you've got a $100,000 line of credit, that line of credit is growing at, let's say, 8% because you're being charged 7.5% on that 30,000. So now, a year from now, you haven't touched that 100,000. That 100,000 has grown to 108,000. I mean, not. It's a little more complicated than that, but to keep things simple, that's what it would be. So those are the 5 pros on it. No payment required, tax-free money, non-recourse, flexible disbursement payments, and a growing line of credit. Now let's talk about the cons. Number 1, upfront closing costs. That's the biggest thing people say. And it's kind of weird because all these cons can be offset with the pros too. Because one of the main reasons that the upfront costs are so much is because there's something called mortgage insurance on all FHA-insured reverse mortgage loans. The mortgage insurance is what protects you from ever owing more on the home than it's worth. So if you did end up upside down on the house, and it's non-recourse, remember, that's the benefit. The cost is that you're charged a mortgage insurance up front as part of the closing costs, and you're also charged an ongoing mortgage insurance premium of 0.5% per year of the loan balance. Let's say you've got a $500,000 home. The mortgage insurance up front, the upfront part of the upfront closing cost, and this is not out of your pocket. You do not have to pay this out of your pocket. It gets rolled into the loan. But that upfront mortgage insurance premium is going to be $10,000, 2% of the value of your home. If you've got an $800,000 home, 2% of that is $16,000. You have a $250,000 home, 2% of that's $5,000. So the higher value your home is, the higher that upfront closing cost is, the mortgage insurance premium. That's a negative, okay? That's why we always say you want to be staying in your home for 3, 4, 5 years at least if you're going to do a reverse mortgage. There's no prepayment penalty for paying the loan off early. However, there's no refund of these upfront costs, okay? And unfortunately, so that's one. Let's keep it there. Upfront closing costs. Number 2, right now, the amount that we could loan is relatively low as a percentage of the value of your home. As the interest rates go up with reverse mortgages, the percentage of the home that we can loan goes down. I'm getting calls all the time, every day. I get calls from people. They call me and they say, hey, I've got a $500,000 home. I owe $250 on it. So I've got 50% equity and I'm 70 years old. And I say, I'm sorry, I can't help you. We have to loan you enough to pay off your existing mortgage. And for somebody that's 70 right now, we might be able to loan 35, 36% of the value. So we can only loan them on a $500,000 home, $180,000 or $160,000, whatever it works out to be. I don't know my math very well, or $200,000, let's say. Even though they owe $250,000, the only way we could do the loan for them is if they were to bring the difference to closing. So let's say they had a $400,000 in a retirement account. They could take $50,000 out of that retirement account and apply it towards their loan balance. So now their loan balance is only $200,000 and we can loan them enough to pay it off. However, if you do take it from a retirement account and it's a taxable account, that counts as income and you're going to have to pay taxes on it. And it could really mess things up. So you need to talk to your accountant about that before you do it. Don't take it from a loan officer what you're going to be charged, okay? Don't do that. You need to talk to a professional who knows taxes. So right now, unfortunately, because the interest rates are high, on the high side, I should say, the amount of money we can loan is as small as a percentage of the value of the home. Anywhere between 30 to 50% mostly. And you've got to be 85 years old to get 50% of the value of your home. Somebody in their early to mid 60s is going to get around 30, 31, 32% of the value of the home. The other thing is the balance that is owed on the loan. There's no payments required, but every month you're charged interest and mortgage insurance, and those charges get added to the loan balance. So the amount owed on the home increases over time. One thing too is, now this kind of comes with a asterisk or a caveat, but you cannot deduct the interest that you're charged on your reverse mortgage unless you pay it. That's the asterisk. And most people right now don't deduct their interest on their mortgages. I don't. And I'm working and make a fairly decent income sometimes. Not as good as I used to because I can't help as many people. But so that could be a kind of a non-issue for you. But if you do deduct interest, it could be an issue. There's also a really good tax strategy if you're in a higher income bracket. And let's say you want to roll over an IRA and you've had your reverse mortgage for 10 years or so. Talk to me about that, okay? If you've had your reverse mortgage for a long time and you want to roll over your IRA and learn how to do it without having to pay taxes on that IRA, it's a possibility we might be able to help you. The other thing, the number 5, and this is kind of but it's a negative, is there's a lot of paperwork. I joke about it. I say I'm with the Department of Redundancy Department. We like to say things multiple ways to do our best to confuse the heck out of you. Unfortunately, it's a government loan and there's a lot of paperwork with it. Be that as it may, okay? Some people look at that as a negative and some people aren't really too impressed by it. Okay, let's talk about some examples real quick, because one of the most common ways people will use a reverse mortgage is to pay off an existing loan. And before I forget, if you have any questions, you are listening to Reverse Mortgage Radio. My name is Bruce Simmons. I'm the Reverse Mortgage Manager for American Liberty Mortgage in Denver. You can reach me directly at 303-467-7821, 303-467-7821. And you can also visit me online at reversemortgageradio.net. reversemortgageradio.net. If you just tuned in and you missed most of this show and you're like, hey, darn, I want to listen to this whole thing, go to reversemortgageradio.net. In the upper right-hand corner, you'll see Reverse Mortgage Radio. Click on that and you'll get a list of all my podcasts dating back to 2017. And this show will be up next week. It'll be up there probably usually Tuesday is when my web guy gets it on my website. Okay, but let's talk about somebody who has an existing loan on their home. Let's say you're 74 years old, and I wanted to be specific because the numbers count. 74-year-old borrowers, you have a $500,000 home, you have $175,000 left on an existing mortgage that started out at $200,000. You took it out in late 2020, so you got a great rate at, say, 3%. And it's a 15-year loan. So you've paid it down over the last 3.5 years from 200 to 175. You've got 11 and a half years left on this loan. Your principal and interest portion is going to be $1,377 smackers a month. But you need to retire. And that extra $1,377 a month could come in handy now that you don't have an income. Well, let's look at what happens. So you call me, you tell me you're 74 years old, you need $175,000 to pay off your mortgage. I can get you just enough to pay it off. And there's closing costs and things, but we're not going to get into all that right now. You say, okay, I'm going to pay off the loan. I'm going to pocket $1,377 a month. That's a sweet deal, right? But there's also drawbacks. You remember, the loan balance grows over time. Your starting loan balance to get that 175 is going to be around 192 to start with. At current interest rates in that 7.5 range. Now, we don't know what's going to happen. These are adjustable rate loans most of the time. That's the ones that give you the most money and they have the lowest interest rate. Fixed rates are at a higher interest rate and you don't get as much money. I wouldn't be able to loan you enough on a fixed rate. But so you, over 10 years, you've saved $1,377 a month over those 10 years. And then your loan balance is going to grow from $192 to about $410,000. You say, holy moly, that's $200,000 that has grown. Yeah, that's true. But you remember, cash is king when you're retired. You've saved $1,377 a month. And over the course of 10 years of saving $1,377 a month, that equals $165,000 that you've kept in your pocket because you weren't paying that out every month, right? Remember that. So your loan balance grew by $220,000, $218,000, but you saved $165,000. So the difference in that is about $53,000. However, we have to remember, your starting loan balance before the reverse mortgage was only $175,000. You were charged roughly about $17,000 in total closing costs, $10,000 of which was for the mortgage insurance because you have a $500,000 home and 2% of that value went to FHA to insure the loan. So really, your loan, the total cost over 10 years for this loan was about $70,000. But you had that flexibility of keeping that extra money in your pocket. You had the peace of mind of knowing that you don't have to make this mortgage payment and you're not going to lose your house if you don't make the mortgage payment. That's a huge factor for a lot of people. They're trying to figure out, okay, I got to shell out this much money every month, and it weighs on you. What's peace of mind and cash flow worth in retirement? I don't know, but in my mind, I know 100% part of my financial plan is doing a reverse mortgage when I'm old enough to do it and I'm in my home that I'm going to stay in. I think it makes a lot of sense. There's pros and cons to anything, but in my mind, the reverse mortgage has way more pros than it does cons on as far as when I look at it, the way I'm going to use it, and depending on your situation, depends on what's important to you too. That's why if you give me a call, I can talk to you about it. We can weigh what's important to you. What is, are closing costs real important to you? Is owning your home free and clear real important to you? If that's the case, you probably should not do a reverse mortgage, right? But if cash flow is real important to you and you want to be able to retire, hey, this is a perfect situation, assuming we can loan you enough money to pay off an existing mortgage. Please feel free to call me. My name is Bruce Simmons. You can reach me directly at 303-467-7821. 303-467-7821. I appreciate you joining me today. And also, too, visit me online at reversemortgageradio.net. reversemortgageradio.net. Please, you can go there. You can also download my consumer guide that explains all about reverse mortgages. I list pros and cons. I list how the line of credit grows, all the details about reverse mortgages in this handout. And you can look it over, give me a call with questions, shoot me an email if you want an answer in writing. I'll type it all out for you. But give me a call, visit me online at reversemortgageradio.net. Hope you have a fantastic day, and I look forward to talking to you again. Bye.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821 or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.